All right, for those of you that don't know, there is a 1% interest rate hike that happened overnight that caught a lot of us off guard. I'm going to make this video as raw and unedited as possible, and I want to get it out to you as fast as I can. And I'm going to go over what my opinion is on what's going to happen in the near future with this rate hike that everyone is freaking out about. I can be honest and tell you that my phone hasn't stopped ringing for the last 2 days with this whole rate hike thing, and I know a lot of people are starting to panic, but it's going to be okay. Most of us were under the impression that there was going to be a 0.5 or 0.75% interest rate hike, but the Bank of Canada went ahead and did it 1 basis point, which threw a wrench in a lot of people's plans and really, I think, put some fear in a lot of people's future here. So I want to go over what I think is going to happen and how this is going to affect the market here in Toronto. All right, so I know that a lot of buyers and first-time buyers, homeowners already are feeling super uncertain right now of what's happening, and that's normal. I think a lot of us are feeling that way. So I want to go over and explain how this will affect you and what you should do in the near future here. If you're a fixed-rate mortgage holder, you're okay. Unless you have to renew soon, you're okay, you're in the clear, your payments are going to stay the same, and you're good to go. However, if you are a variable mortgage rate holder like myself, your payments, depending on what your payments are or what your mortgage is right now, probably increased significantly overnight. The way it works, from my understanding, is for every $100,000 of property that you own, that's about a $50 monthly payment increase right there. So for example, on a $600,000 mortgage, your monthly payment went up about $300. So I know that's a lot of money, and I think this is going to affect the market in the sense that not everybody is okay with that $300 property or that dollar increase. And, you know, that's on a $600,000 property. You double that, and that's tough. And I think the thing that we're going to see a lot of right now is Toronto is full of investors, okay? A lot of people in Toronto own multiple residences, multiple condo units. And the biggest issue that we've seen in the last few years here, during the pandemic, these rental prices were crazy low. I remember you couldn't give away certain condos. You were looking at one bedrooms were as low as $1,600, $1,500, $1,400. If the property that you own is 2018 or older, that building is rent controlled. So with that being said, you have, let's say for example, an investor, they have 5 properties. They're all rented out. They're all pre-2018, all paying COVID prices. Well, they were okay for a little bit, you know, losing $300-400 a month, but now they're losing up to $1,000 a month. You times that by 4 or 5. That's a big loss for a lot of people. And you can't just kick people out of your rental properties, as you all know. So unfortunately, I think we're going to see a lot of people that are forced to sell in the next little bit, and that's going to change a lot. We're going to see these changes not happen immediately. We know that whenever these things happen, they take time to really, you know, show in the market. So with all this being said, I think we are going to see some prices drop in the next little bit. We already have seen prices cool down a little bit, and that's okay. With that being said, I know it's extremely difficult right now for consumers to really navigate through the market and navigate through these articles they're reading online. I'm not trying to, you know, shit on Narcity or BlogTO, but they tend to be very clickbait type article sources. One, for example, I got sent by all of my clients that said 1 in 4 Canadians are probably going to be forced to sell in the next year. So that title alone, it's 1 in 4 Canadians. So yes, we've seen prices cool, but that's talking about Canada. So you can't really compare prices and the stability of the market of downtown Toronto to Sudbury, Windsor, Thunder Bay. It's a totally different market. And in the Toronto alone, the pockets change enough as it is, let alone Ontario. So yeah, these articles are, you know, they have some truth to them, but you have to really understand what you're reading, and you need to actually dissect these articles. And if you don't know how to dissect these articles and actually understand what you're reading, you need to reach out to your real estate professional, because they should be guiding you along and actually explaining this to you. For example, you can't compare someone that bought a condo at the peak in Toronto versus somebody that bought a house at the peak in Windsor. Toronto house prices rose during that peak a lot. However, Windsor, Ontario rose 41% during the pandemic. So someone that bought a condo at the peak in the downtown core of Toronto, where everybody wants to live always, isn't going to suffer like the person that bought an $800,000 shithole in Windsor. Sorry for swearing, but that's the truth. Even though they bought a house for $800,000, it probably wasn't worth ever $800,000, but they paid it because they thought that was the right move at the time. Those people are going to be the ones that are hurting a little bit here. As the closer you get to the core, I think you're going to be a little more safe in that sense. But so in the current market conditions that we're seeing right now, if you haven't bought or sold in the last little bit, if you're looking to sell a property, yes, you're going to sell your property at a lower value than your neighbor sold in January, February, March. It's just a sad reality. You're going to sell for less than that person because the interest rates are going up, prices are coming down. However, the good news to that is if you're selling a little bit low, you're going to be buying low as well. So at the end of the day, it all kind of equals out. So with that being said, if you're able to hold on to your property right now, I really don't think it's the best time to sell unless these rising interest rates are forcing you to sell, then that's another story. But I just wanted to have this silver lining there and say that if you're selling low, you're going to be buying low. And at the end of the day, if we look back to the beginning of time, there's always ups and downs in the real estate market. I do think this is going to come to an end. I do think these interest rates are going to stabilize. The Bank of Canada is clearly trying to fight inflation. They're doing everything they can. But at the end of the day, I think we're going to see this level out and we're going to see prices rise again in the future. Do we know how long this is going to take? No. Do we have some ideas and estimates? Of course, but we don't know. So if you can hold, I would hold through this wave if you can, because I think the upswing is going to be even bigger on the other side. One thing that I want to point out, and again, everyone's trying to time the market. I know that's extremely hard to do. And if you're trying to time the market, good luck to you. And if you know how to do it, please let me know, because I still haven't figured it out yet. As interest rates rise, so do your monthly payments. So keep in mind right now that interest rates are rising, which is raising your monthly payment. At that time, prices are coming down, so they almost equal themselves out. This is a conversation you need to have with your mortgage broker to ensure that you're making the right play here. But again, to keep in mind that as interest rates rise, so are your payments. Yeah, the prices are coming down, but it might not make sense to outweight this and watch interest rates rise even more. You might outprice yourself from the market. All in all, I honestly like working in an environment and a market like this. It's a lot easier. It's a lot more relaxed. You're able to put in conditions. You can take your time. Property is sitting on the market for 30, 40 days. We can actually negotiate again. When it was January, February, March, it honestly wasn't a fun market to be a part of. Properties were selling within one day for 100, 200,000 over asking. It was extremely confusing for consumers because they genuinely didn't understand what was happening. They were trying to guess the prices. Realtors were pricing it way under market value, confusing the consumer even more. And now the market that we're in, even though it's a little uncertain and we don't know what's going to happen in the immediate future, the prices have come down to a more reasonable price. We're seeing some prices in the downtown core around $1,000 a square foot. I think if you can get a property in downtown Toronto for under $1,000 a square foot or at $1,000 per square foot, you're okay. You're going to do well in the long haul. Real estate isn't a short traded thing. If you're looking to buy low and sell quick and make a lot of profit, I don't know if that's the right play. I don't know if that was ever the right play in real estate, but if you're looking to buy and hold this for a long term, I think you're going to do extremely well if you get into the market now. I also work with a lot of first-time home buyers, and I love this market for first-time home buyers, but it takes a real estate agent over-communicating to you and over-educating you during this process. As a consumer, it's equally as confusing right now as it was in January, February, March, because of all the articles that are coming out and all the doomsday people that are coming out talking about market corrections and market crashes. So I know that it's confusing for the consumer. You read an article online that says the market is crashing, and then you see a property that sells over asking still. It's extremely confusing right now. But as realtors, we need to over-communicate with our clients and over-educate them right now and guide them along and show them what's happening. So as a first-time home buyer, I do genuinely believe that this is a good time to get into the market. It's a good time for people to upsize. It's a good time for people that are looking to build their portfolio. But on the other side of things, if you own properties, I know this can be a very intimidating time. I've been on the phone literally for the last 2 days talking to all of my clients, trying to talk them off the ledge. But if you do own properties right now, it's going to be okay. I know there is another interest rate that they've been talking about coming in September. We don't know what's going to happen with that or not. No one can see the immediate future. And if anyone tells you they know exactly what's going to happen, they're lying to you. But if you own multiple properties or if you own any properties and you're not comfortable with your variable rate, there are other options for you. I just suggest talking to your mortgage broker. One particular product that my mortgage broker has talked to me about in the last little bit, I know it's through TD Bank. And again, I'm not a mortgage broker, so this is me giving to you very basic understanding of it because I have a very basic understanding of it. You pay a fixed price, so your monthly payment stays the same every month. And whether the interest rates rise or lower, your money gets allocated differently to principal and interest. So if you're more of a nervous person and you don't feel like riding this wave, then maybe you look at breaking your mortgage and refinancing and looking at other options to see what's most comfortable for you. One thing I want to touch on is that this announcement obviously shocked a lot of people. It happened overnight, and I know a lot of people are panicking, but I don't think you should make a decision on an announcement that happened overnight to completely get yourself out of the real estate market. If I were you, I would take some time, digest, look at your options, talk to your mortgage broker, talk to your real estate agent, get an understanding of what's going to happen, and try to educate yourself to the best of your ability. And if you don't know where to turn, always talk to a real estate agent that knows what they're talking about and actually, has skin in the game in the sense that they're actively trading in the market. They see what's happening because they can maybe reassure you or put your mind at ease a little bit or kind of show you what's happening in the market right now. And again, just explore your options before doing anything crazy. So all in all, this 1% interest rate hike obviously has gotten a lot of people shook, and I totally understand that. There are options for you. I think this is going to affect the market. There's no doubt about it. We're going to see prices continue to drop a little bit, but that's okay. No need to panic. No need to hit the panic alarm. Don't try to panic sell right away. At least for the very minimum, talk to your mortgage broker, talk to your realtor, see what your options are and go from there. And so whenever there's any sort of uncertainty in the real estate world, and there's a lot of it right now, whenever there's uncertainty, first-time homebuyers especially, they tend to jump off that fence from buying and look to renting. I don't think this is a play. I think there's a lot of opportunities for first-time homebuyers out there, a lot, and a lot of amazing condos. And you can finally get something for under asking in this area that you've always wanted to live in. So if you're looking to rent, let me just warn you, and I'm going to do a video on the rental market as well. The rental market in 2022, right now, it's July 14th. The rental market is not a fun place. I hate it. You're going to hate it. It's not a good time. I have lawyer clients, I have physician clients, have 800 plus credit, 90,000 a year, competing against 10, 15 other offers. People are putting a whole year up front. It's like normal, overpaying by $100. Some agents are even holding bidding wars for rentals. It's chaos. I don't suggest jumping in that. If you have the ability to buy, again, this is not something you jump into, but with these interest rate hikes, take a look at your options. If you have the ability to buy, at least evaluate it. At least take a second and evaluate it, because the rental market, I'm telling you, is not a fun place to be. Anyways, I just want to get this video out as fast as I could. I try to keep it as casual as possible. The interest rate, of course, is scary for a lot of people, and a lot of people are concerned, confused, whatever. I'm always available to talk. If you ever want to have a chat about this, I would love to hop on a call with you, a Zoom call, whatever it may be, or me for coffee even. It's going to affect the market. It's going to affect prices. We don't know what's going to happen next. We know that there's another interest rate hike coming potentially in September. You need to evaluate your options. With that being said, I try to get this out and as raw as possible. These are just my opinions. You need to speak with a mortgage broker. The mortgage brokers have a lot more answers for you about this, but I have a very detailed PDF that I can send you on how this will affect you and what stage you're looking at. If you're a first-time home buyer, if you're an investor, if you're looking to upsize, I have a PDF for you that can explain everything. I'll attach it here in the YouTube video. And that's it for this interest rate hike video. I really appreciate you guys watching. I appreciate you subscribing to my channel and engaging with me in the comments below. I look forward to seeing you guys in the other videos. Thank you for watching.